Hello, good people, and welcome back to part two of financial institutions. So let's go ahead and pick up right where we left off. How does a bank work? Well, first of all, you have people contributing money into banks. So you can put money in the bank. All right, you can have loans, and then you have a bank down here at the bottom. So make sure you draw all three of these. So here's the deal: people contribute money into the bank through savings accounts, typically speaking, and they'll put money in their checking. And typically, checking accounts move pretty freely back and forth. You pay bills out of checking accounts. Saving accounts, mostly, you just like put money in there and it stays, and you just let it sit just in case something terrible happens. All right, and then the bank pays you interest. So because you left your money alone there and you trusted the bank with your money long term, they will pay you interest. All right, now the bank also loans out money to people, and you pay the bank interest on a loan. And however many people who bank at this particular institution, let's say we take the North Carolina Credit Union in Winterville, right on the corner at Davenport Farm Road, then you would pay the bank interest on that loan. Let's say there were 5,000 people who banked at that one particular location, and the bank issued 3,000 loans and brought in, and they decided to loan out $3 million in loans, but they brought in $5 million worth of interest. Okay, so they loaned out $3 million, but they brought in $5 million. So they got their $3 million back plus an additional $2 million. Who keeps that? The bank does. Certainly not you, because ultimately the bank is a business, and businesses do have to survive. So the bank keeps the difference. So money is put in through interest, money is loaned out, and the bank keeps the difference. All right, now let's talk about financial services. Okay, so banks and credit unions specifically have a lot of services that they can provide. Investment banks have this as well, brokerage firms, and insurance companies. So you can go to any of these financial institutions, specifically commercial and investment banks, or a brokerage firm, and you can ask for retirement help. It is never too early to start thinking about retirement. If you're like, Ms. Hurst, I haven't even started working full time yet. Well, good for you, because it is never too early to talk about retirement. So they can assist you in your account decisions. You choosing the right retirement account for you is 100% imperative, because you don't want to work until you're 85, okay? You don't want to have to do that. So go ahead and start talking about how to save your money and invest it wisely, okay? They'll decide which type of account is best for you along with your opinion. It's not just their opinion. So retirement accounts can be very difficult, even if somebody is well educated and is like, yes, I know about money, but I do not understand retirement, okay? They will help you out. All right, they'll help you manage your money long term. They'll assist you in major purchases. They'll tell you some advice for timing, like don't buy a house right now, wait a year and get your credit score up first. Or they'll tell you like pros and cons of buying a house versus renting. They'll tell you about whether or not you should buy this car, if you should get a small business loan and open up a small business. Loans, mortgages, lines of credit, and equity are also something they can help you with. So they can give you a loan for your house. They can give you a loan for your car, a loan just period, because you need to pay off like credit card debt. They can help you open a line of credit if you want. And they can help you out with the money that is the difference between how much you have paid on it and how much the house is worth is your equity. They can help you out with that. All right, but what happens if you don't use the services of a bank? This is called being unbanked. So your life literally revolves around like cash cards and just straight up cash. All right, if you have a checkbook, that means that a bank has given you checks. But if you don't have a bank account anywhere, you're going to have to go to a check cashing service because you cannot open a bank account. Right, it disproportionately affects people who are living in poverty and people who are in lower classes and the lower middle class. About 25% of Americans are either unbanked or underbanked. That's 70 million people. 70 million people. That's the equivalent of like 12 states worth of humans. Okay, so that's a lot of homies that do not have a bank account. So this is partially due to a lack of generational wealth. So a lot of times, if you come from poverty and you've had a hard time like finding a job, and you are having a hard time getting out of the cycle of poverty, sometimes that could be a reason that some people are underbanked or unbanked. Being a cashless society, which is a big topic right now about moving away from cash and moving to just cards. This is a big deal because that means that 70 million people are not going to have any way to pay for things, because if you're only accepting debit and credit cards, people who are unbanked don't have debit and credit cards. They just straight up have cash, and that's it. So moving to a cashless society is not helpful for the lower classes. Philadelphia prevented the city from declaring people from denying cash. You cannot deny somebody the ability to pay in cash. You can't do that. Um, so that is that. A lot of people in the Great Depression era, people who are like my grandma's age or my grandma's parents' age, who watched the banking industry literally crash into like the ocean in front of them, were like, you know what, we're just not going to bank anymore. And so they would like you'd hear stories about people putting money in mattresses, burying it out in buckets in the backyard. People are like, "Oh my gosh, that's just a funny story." No, it's not. Like we found money when we cleaned out my grandparents' house after both of them passed away. They had an ice cream bucket in the kitchen full of quarters that was an equivalent of like $400 because they were like, "I'm just not going to put this in the bank. I'm just going to put this in, in this ice cream bucket." It was very strange. So a lot of people in that generation just don't trust a bank. All right, so Visa actually offered 10 grand to restaurants to not have cash. They offered them money to 50 different restaurants. Whoever applied and got picked, they would help them out with 10 grand if they did not accept cash. So what happens if you only use a few of their services but not all of them? This is known as being underbanked. So we talked about just like straight up not having a bank account. Being underbanked means you don't have access to specific like lines of credit. You don't have good enough credit to do that. You only have a checking and a savings, that sort of thing. You're only utilizing a few tools from financial institutions, and you typically use non-traditional methods to manage your assets. So like you have a bunch of envelopes and you just put cash in them for specific things, and you're like, this is the cash for my utility bill. This is the cash for my rent. This is the cash for my groceries or whatever, and you just spend until you run out of money. So it can be very risky long term, and most people who are underbanked lack having retirement funds. All right, so that can be pretty rough for those who are unbanked or underbanked. All right, so that has been financial institutions, part 2.